Well, if you want a bank loan to buy a house, you might find that rather tricky. But for a car loan, it's a different story. And we've got Neil Shah joining us on the set now to tell us all about this. Neil, thank you very much for being here.
Yeah, sure.
Car loans, they're stepping on the gas, the banks are anyway.
Yeah, definitely. I mean, an average borrower still faces an uphill climb trying to qualify for a mortgage to buy a house. But the story is entirely different for auto loans. I mean, you're seeing a big spurt in credit, and people that need to buy cars are able to.
And tell us how they're doing this, because part of this is some interesting accounting where, well, maybe not accounting, interesting financial engineering where they're spreading the cost of the car over a much longer period, right?
Yeah, people are, I mean, one thing that some borrowers are increasingly doing is, you know, they may want to buy a more expensive car, but it's kind of, the monthly payment would be kind of steep. So the market is allowing people to get not a 4-year loan or a 3-year loan or a 5-year loan, but, you know, 6, 7, 8-year loans, which is a good thing. It's a good thing if Americans are able to get more credit, if somebody with a bank account flush with cash is able to make, you know, help their finances and get the car. It's also slightly worrisome because, you know, there could be a dodgier borrower that will run into a pinch in a couple of years and may need to sell the car. It's not a good
and the reason that could be a problem, it's if the, you know, you've got most of the car paid off and you have to sell it and you're covering the cost of the loan and maybe you've got a little bit left over, that's okay. But, you know, cars don't last oftentimes much longer than 7 years, not in a working condition. I mean, some do, some don't. So if you have an 8-year loan on a car, you might find your loan outstanding is actually higher than the car is worth, right?
That's right. I mean, cars don't last very long, and the values of cars also go down. So it's interesting and a kind of a risky development that's happening. But, you know, at the same time, one thing that's worthwhile pointing out is that delinquency rates are fairly low. I mean, the rate, the percentage of loans, auto loan payments that are overdue by 30 days is like 2.5%. We're at where we were in 2007, pre-crisis. What I mean to say is auto borrowers are in pretty good shape. So
is that because they're driving the car for longer now than they used to? A lot of people used to sort of get through a car in 3 or 4 years. Now they're just like driving it into the ground until the wheels fall off, right?
It is, and that's been actually one of the bright spots in the economy. According to a credit reporting firm, Experian, the average car on the road is now 11 years old. That's a record. You got a bunch of Americans that, you know, surf through the crisis okay.
That sounds un-American, doesn't it? I thought new was everything. I said, you've got to have a new car. It's got to be shiny, it's got to be new.
It's not Cuba yet. But I mean, 11 years is a long time. And so as a result, you know, the job market's not hot. People aren't buying houses, though that's starting a little bit. People even, you know, the people in terms of credit card balances, they 1 month they'll borrow, another month they won't. One thing they are doing is buying cars, and part of the reason is because they have to. If you're you know, an average American consumer, you may have put off a purchase like a car. You may not be ready to buy a house, but you put off that turning in that clunker for something better. And what we've been seeing month after month, though that, you know, auto numbers can be volatile, but in general we've been seeing this pent-up demand for cars leading to auto credit and auto sales.
So we have seen those auto sales lift up a bit as people replace cars that they've really stretched, and good on them for doing that. It's very frugal. Is this just a temporary bump then in the auto sales as people just continue to go back to sort of, well, I've got a new car now and I'm going to keep it forever? Well, not forever, but a long time.
That's one thing I've been asking about it. When I've talked to economists and auto analysts about it, they have not been worried that suddenly this spurt is suddenly going to go away. So people do expect that pent-up demand will provide a positive boost to the economy for some time. The other thing is that even if that spurt does peter out after a certain point, people do expect at some point the job market to improve, consumer spending to improve in general.
We can hope so, can't we?
So
we can really hope so. That'll be good if that actually happens.